Good morning, everyone. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 23rd of December. Early accidental release showed that the US consumption accelerated. Personal spending picked up in November, indicating that consumers boosted the largest part of the US economy heading into the final quarter of the year. Spending rose by 0.3% month over month from a downward revised 0% in October, according to an accidental early release of the data today. Following a downward revision of the final US Q3 GDP data yesterday, the solid consumption figures suggest that household expenditure is being powered by improvements in the labor market and lower energy prices. Moreover, November's spending increase could result in moderate improvement in Q4 growth rate. The dollar reaction, however, was limited on the news. Nevertheless, the Fed has stressed several times that the pace of the tightening cycle will be data-driven, and accelerating consumption provides signs of upward inflationary pressure. This is positive news overall for the US economy, and the US dollar could regain some of its recent losses. As for today, in the UK, the final estimate of Q3 GDP data is expected to confirm the second estimate and show that the economy grew 0.5% quarter on quarter, a slowdown from 0.7% previously. The overall slowdown in Q3 compared to Q2 was primarily owed to weakness in the construction and manufacturing sectors. Since then, the two sectors have recovered somewhat, however, this will not be reflected in Q3 data. Therefore, the market reaction might be muted at this release, especially since expectations are for a confirmation of the second estimate. From Norway, the AKU unemployment rate for October is expected to have remained unchanged. The official unemployment rate for the same month was also unchanged, which increases the likelihood for another flat reading. Thus, the reaction on Norwegian krone could be muted at the release. From the US, we get durable goods orders as well as personal income, all for November. The durable goods orders headline figure is expected to have fallen, a turnaround from the month before, while durable goods, excluding transportation equipment, are forecast to have remained flat. The focus is usually on the core figure, and the expected stagnation could cause the dollar to trade somewhat lower. Personal income is expected to have slowed, and since the personal spending figure released earlier was expected to offset the negative impact on the dollar by the other releases, strong data now are needed to prevent a tumble of USD. If personal income indeed decelerates, this discrepancy could be explained by the lower oil prices. As oil becomes cheaper, consumers have more disposable income to spend, and this might increase the overall demand. The University of Michigan final consumer sentiment for December and new home sales for November are both expected to have increased, which may support the dollar a bit. Following the disappointing existing home sales for the same month yesterday, a solid reading from new home sales is required in order to restore the confidence in the US housing market. The core PCE rate for November is also due to be released, but no forecast is currently available. From Canada, we get the monthly GDP data and retail sales figure both for October. Even though the data are outdated, both indicators are expected to show a rebound from the previous month. This may ease some of the downward pressure on loonie, at least temporarily. We have no speakers scheduled on Wednesday's agenda. For more information, including technical analysis, please read the full comment on ironfx.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.